Hi guys, Steve Crawford from Your Spending Coach, and today I want to just run through really quickly our personal banking and lending solution. So the first question is, why would you actually use a virtual banking and lending solution? And obviously one of the benefits is hopefully that rather than reinventing the wheel, you can just leverage off a process that we've been running in our own advice business for the last 7 years. You've probably got clients that are already on the money management program that you've created after coming to one of our workshops, and your spending and savings plan's working really well, but you don't have the skills in-house to implement a banking and lending solution. You want a team of experts that are going to help you do this and get it right and set up the right way every single time. Now we've got two experts that help you. One's our mortgage broker and the other one's our advisor that actually works as a banking and lending planner for your client. Obviously, by working with us, we can use one of our preferred partner banks. Now we've already scoured the market and narrowed it down from the 50 odd solutions that are out there down to 3 lenders that we believe offer a great banking and lending model designed to actually support the spending coach spending and savings plan. In most instances, the cost of this service is going to be covered by one of our preferred banking partners, and I'll cover that off at the end. So there's 4 things that your clients are actually going to get every time you refer them through to us. And let's go through those in a little bit of detail. First one's a personal lending assessment. Now effectively what it's designed to do is show them how much they can actually afford to borrow. Now if they've already got a loan, obviously what they want to know is that they can refinance what they've already got, but they might want to borrow a little bit more. And if it's if it's their first home that they're working towards, then they probably want to know how much they can borrow. Rather than just jumping online and getting an opinion of what one bank will lend them, this will actually show what the entire market's going to offer. Also the range of rates that are likely to be provided. We'll then do a comparison against their current lender if they've got one, or if they've got somebody that they're thinking of using, and against our 3 preferred providers to actually show what an ideal solution looks like that we think, and how their current lender stacks up, the rates that they could reasonably expect to get as well for how much they're asking to borrow. At that stage, if they want to continue, then we can move to the next stage, which is around the credit proposal and the preliminary assessment before we get to any sort of recommendation. So the clients can opt out at any stage through this process. Let's assume though that they want to proceed. The banking and lending plan is first and foremost designed to actually teach them how to use their home loan properly, to pay the thing off faster, to reduce their interest costs as much as possible, and it teaches them how modern banks actually work. We'll look at their current structure because if it's already perfect, there's no point changing it. We'll find the things within their setup that they really like, the things that they don't like as well, because our experience is the more you get your clients engaged in the process, the better the outcome is for them. We'll provide them into an insight into why we're going to recommend the structure that we are, not just explain to them what it is. So we'll talk to them about offset accounts and how they're used and how they're designed. We'll talk to them about spending buckets and savings buckets and storage accounts, and we'll try and help them create their own Goldilocks version of how many accounts they think they're going to need, ultimately to cut that mortgage down and save them thousands of dollars. As I said, with the spending, storage and savings accounts, it's designed to help them hit their targets. So we're not going to go forward and recommend everybody has 12. We're going to sit there and work with them to say, okay, well maybe 2 or 3, maybe 4 accounts is what they actually need. And so it's, again, very similar to what you would have covered off with us in the workshops. At that stage then we'll look at actually recommending a structure, giving them a new diagram that shows them all the different accounts and how they'd work, and then give them details on the next page around how to actually use the accounts. The valuation is the next step in the process, and this is really critical. We don't like desktop valuations, we don't like automatic valuations, we don't even like curbside ones. We want internal valuations. So what we're going to do is we're going to order one for the clients. Now these are usually valued at about $400, and we'll cover that, and the cost in this is $50, and we'll talk about how that works later. But it's going to give them an independent and unbiased valuation of what their home's actually worth. The reason why that's important is because that's going to be explicitly linked to the first of the two criteria, being the LVR, how much they can afford to borrow. Now, whether it's investment lending or new lenders, you want to make sure that what's happening here is they're trying to stay in under that 80% mark. The details then that we're going to get from you to start with, from their income and expense terms, will actually enable us to start to get an understanding of what everybody's going to offer. We'll then get them to do an online fact find, which is actually going to give us even more information so that we can get those absolute best terms up front. Rather than putting it through the lender and then finding out what they're going to offer, we want to know before we go there. Obviously, if we can't get terms through one of our 3 preferred lenders, which is highly unlikely, then we go to our secondary lenders, and then so on and so on. Best fit recommendation and implementation. So let's have a look. Option number 1, they've got the choice to do absolutely nothing and stay exactly as they are with the lender that they've got and change not a thing. And in fact, some of your clients are probably going to want to do this. All they'll do is they'll take what we've provided for them, which has probably got some lenders showing lower rates. They might take it back to their current lender and they'll probably ask for a discount. The second thing is they're going to stay with their lender if that's what they want to do, but improve their structure by adopting what we've actually recommended to them in terms of the ideal setup. If they're going to do that though, they've got to do it themselves because the lenders won't actually allow us to operate on their behalf. So they can take our structures, but they're going to have to go and implement that themselves. You probably won't even be able to do it for them either. Obviously then there's an option to implement our ideal setup via our recommended lender. Now, a recommended lender may actually be staying at their current lender, and that's because they could have a fixed rate. We might not be able to beat their rates anywhere else or their setup anywhere else. They may actually be with one of our preferred lenders already. This is just about them engaging us to manage the process with them from that point on. What they'll actually see out of all of this is that they've got choices. They're in control, and that's really important from their perspective and from your perspective. You don't want to get a sense that we're just going to move them from one loan to another loan, from one lender to another lender. Yes, that may be an option, and yes, that may be the end outcome, but it's not something that we're going to be pushing every single time. Everything comes at a cost, and obviously we have to have a mortgage broking license to be able to do this, and we've got to pay our aggregator, which is AFG, a fee to be able to do this as well. So there's the costs that come in 2 levels. The first one's around that internal valuation. So there's a $50 charge up front, which is going to be payable by credit card for us to organise that internal valuation, and it's done by a specialist valuation firm. So the clients actually get a report that they can take away from this. Then to go through the process and get that best fit pack in the end, that's valued at $1,000, and that's what we normally give our experienced wealth clients. So they're getting the exact same experience as our clients get in our business when it comes to the banking and lending. For you, we're going to offer that at $250 for singles and $500 for couples. So I said at the start, there's an option where the clients don't have to pay. And basically the way that it works is this. Their best fit pack's going to include a personal lending assessment, a banking and lending plan, a best fit recommendation and implementation all the way through to settlement and structuring of the loans and the sub accounts, and even linking their credit cards and teaching them how to use internet banking and so on. The cost is going to be waived where a loan greater than $300,000 is refinanced to another lender and we're paid a commission from that lender. If they choose to stay with their current lender, or at some stage through the process they default on the application or something happens and they don't proceed, we're effectively getting the clients to agree to hold a bond, that $250 or that $500, and it's charged at that stage. That's the only time that they would actually pay, is if they choose to not proceed with the recommendation that we put on the table, or they default through the process and it doesn't actually complete. So guys, if you want to know more, give us a call in the office, send an email through, jump on the website. But hopefully this is something that you're going to see is valuable for you in your business and for your clients. So we'd love to help. Thanks, and talk to you soon.